Good afternoon, everyone. This is Harmeet from Sigma Picks. Thank you for tuning in. We are coming up on the FOMC meeting on the 26th of July, coming up this week. And so I figured it would be a good time to start going back and looking at where we stand, what's happening, and where could we be heading. So let's get going. All right, so the first few things that let's just quickly review. We were right here the last time at the 443 level, and what I was saying that was that we were getting pretty close to being done as the larger this intermediate third wave right here of the primary third wave, the money wave, the bigger money wave. We are looking at it coming to an end. So for now, everything that we at least that I look for a minimum criteria that has met the minimum criteria, that the third intermediate wave is over, has been met finally. So we do know that the third um, the minute wave, the third minor wave, sorry, is is the largest wave. So that kind of takes care of that. And we also know from the price action this week that ended that the intermediate wave also is extended. So that means that we are beyond the fact that this is getting to be stretched. The intermediate wave is getting stretched, and this could be an end to it, and we could see some consolidation before moving and finishing it out. This primary third wave right here, the primary third wave that we are in, also can be looking to have it finished. Now, so quickly just looking at the primary third wave that we just talked about. So the primary third wave that we are talking about, it has also met all the minimum criteria. The third wave now is the primary third wave has met the symmetry point. So that means that first wave right here and third wave is now finally longer than this primary first wave. Okay, so there is another criteria that just met this past week, saying that we could be also heading into some sort of consolidation for the rest of this month, depending on how Fed do, and that this would be a good time to kind of take a pause and kind of not have as many chips on the table as a lot of people do. So I think again the idea is that we know that the Fed is going to raise the rates, but it will all depend on the language about what they will be doing next. There will be no meeting in August. There is a meeting in September, and so they have a little bit more time to get more data in and kind of decide from there. But the language matters, what they say. Okay, if they say that the cycle is ending, they're not going to be hiking anymore, you can expect that this third wave to continue, the third primary wave to continue higher. Okay, just because we are at 100% symmetry, that does not mean we can't get to this 469 and break through this 479.98 all-time high. We're sitting very close to it. So I think if they say the rate cycle is coming to an end, they're gonna not pause, but they're gonna stop. We can expect this to go ahead and test the all-time high from there on out, and that once we get through, if and that does happen, we get through 469.94 zone or 469 to 470 zone, you're looking at it trying to get to 161.8 percent extension. That is within the possibilities if that happens. Now, if their language is not that good, and they decide, we're going to continue doing what we're doing, and they're not going to give any respite for the markets about stopping, you can expect this to come down and start testing this 431 and maybe down to this 421, 418 zone also. That is a very, very big possibility, knowing that that sets it up still within the idea that this could be instead of an impulsive wave, it could be just be a leading diagonal. Okay, so there is that possibility also. So there are a lot of moving parts still. What has happened is that the VIX has gone down quite a bit. And let's just quickly look at the VIX. I want to show you guys. So VIX has gone down quite a bit. It's below our level. This is where we see the melt up. Easy melt up, and that's what we've been getting. So let's just, if we go back, let me go back to Qs again. I mean, it's the SPY again. You can pretty much tell that volatility has also come down by how small, relatively small, these bars have become. Okay, so the ATR has shrunk. The average true range of these bars have shrunk. That equates to the fact that volatility has also come down quite a bit. So there's a lot happening. I think that Fed, I don't know, so let me rephrase that. This is what I think. I think they're going to say the cycle is over and we're looking at um, pretty much staying at the rate that they're going to come up to for on Thursday to be the final hike for at least for the foreseeable future. And I think we do move up higher here, okay? And I think this is extremely well scenario set up for this third wave to come go test the all-time high. Okay, go test the all-time high, and then once that happens, we should see some sort of exceptional, very large momentum move that gets us through this area, and that would end the fifth larger cycle wave, I think, that we've been working on since last October, that it will come to an end. It's been quite a journey to get there from where we were, and I think a lot of people are also going to be looking to, if that was the case, looking to be taking end of the year profits, and so everything could be just one of those things where you see a high momentum move and then profit taking coming in. So let's go to QQQ. Okay, so QQQs have been leading the markets higher, and we've known this. We've known this since January. We've said the Qs were very, very bullish. Still, just for the fact the larger cycle did not go, the super cycle did not go below 38%, a retraction. This is very important to know, that the second wave right here did not go below 38%. It did actually go a little bit. It pierced through right here. But the point is still that this, knowing how Fibonacci works within Elliot Wave system, understanding what is bullish when it comes to how far the retrace, or how far the pullbacks are relative to how far they've come. It's very important. We knew that. We know where we were going. We also had some areas that we wanted to see it go through, which is 334.42. It did. The next area that we were watching in the last video that I made was this 371 to 373 zone. We are over it. And what I was also stating that this, excuse me, that this could also be an end of this larger, or minor fifth wave and the minor third wave coming to an end, with this primary second wave still being over here, that this third wave is going to come to an end. All again, the criteria for the money wave is, primary money wave is, has been met, that it's quite a bit extended over relative to the first wave, okay, and we could be coming to an end right here. It does not mean it's over. It just means that this could be the end of the fifth wave as we speak. So this right here could also be your fifth intermediate wave. That could be an end, and we will know better once we get through this week. Of course, the next logical question is like, well, what would be evident of the fact that this larger primary third wave that we've been in for a while since March is coming to an end. And if you have watched any of my previous videos, you know that I want to see the first criteria met is that it has to break through this 357 area, okay, the 57 zone, because I want to see the all of this fifth wave to or all of this move retraced 100% back. And then we can look at this being actually the end of the intermediate fifth wave and the end of the primary third wave, which is, of course, 1, 2, primary third wave. Okay, so again, really depends on what the Fed is going to say. Just also be aware that I we don't want to getting below this 313 level. That's quite a bit down now at this point, and just understand that we are getting very close to this all-time high. I do believe that if Fed just says that they after this they are done hiking, that Qs are going to take off towards this 450 level. Just It's just because of the beta of Qs. This is going to just take us. That means the intermediate third wave did end here. The fourth wave was really did not retrace very far back, and you can see a high momentum fifth intermediate wave come in. Okay, so high momentum fifth intermediate break coming in, getting us through this all-time high, and breaking out two new all-time highs. So Qs is something that you should be very excited about, obviously, but also know that it is a very, very crowded trade again within the 10 tickers that have been carrying it. At this point, people are kind of realizing, oh my God, Qs are actually gonna, go hit all-time high, and they pretty much missed out on this huge move that we've had. Okay, but if you've been following, we've been following this move. We know what was coming, what we were looking for, and we were in this whole trade the whole time. And it worked out really, really well so far, and hopefully we'll continue to pursue this on the long side. But being mindful that Qs are and NASDAQ is very beta relative, where it is extremely beta sensitive and has high beta, and the momentum moves can be large and in charge. Okay, so let's go to the last one, IWM, and the things that we were looking at, things that we wanted to see was getting through this 199, 220, 202 level, this major resistance zone. We wanted to see it go through it to give us the credence that this rounded bottom has formed and moving up. Okay, there is still not enough evidence to state that the second cycle, super cycle, the second wave, the super cycle wave is actually come to an end, but we do know that it did not retrace back super far. Okay, so the SPYs took a bigger hit, and IWM is in a better shape, but still we've been stuck in this large Darvis box for a year and a half, and the first thing that we want to see is get through this fourth wave, which is 199.26, get through the larger A wave from the previous ABC. Okay, we want to see that, and get through this 222.25 level. There is quite a bit of work to do, and that being said, we also know that this is your leading diagonal structure, okay, that has also formed. So all the minimum criteria for this first wave of primary wave of the cycle, okay, the first wave is done. So we have not gotten to the money wave yet. So there is going to be good trading to be had in IWM and all the stuff that comes in it. Know that this is the first wave, okay? This is one. All the minimum criteria has been met. If we do see a a pullback that is again 38%, 38% level, okay, the Fibonacci level, we know that that's going to be very bullish. I don't want to see 23%. I want to see it to 38%. Okay, that is the most important part, because those pulls back have more or higher upside versus the pullbacks that are not as deep when it comes to start of the third wave. So, and I do expect that a lot of people will be aware of the fact that markets are getting healthier and are becoming more bullish. So this IWM could produce an oversized move relative to QQQs and SPY when it comes to that, because it has not gone through the third money wave. So this could be the trade for the rest of the year coming in, okay, where people are going to cycle into small caps. They're going to sell off the big caps that have been holding of NASDAQ, Apple's, the NVIDIA's, Netflix got hit pretty bad, Tesla's going down. So you're starting to see a little bit of movement out of the mega caps, NASDAQ mega caps. Also understand that we do want to know and see how Meta, how Amazon, and how eventually Apple will do after their earnings, because that would give us a little bit more idea where we're going. We do know the Nasdaq is also rebalancing or has rebalanced. So just know this could be your trade going into at the end of the year, just because this has been laggard and people are going to try to rotate into that. That's a big possibility. Okay, I hope this helps. Thank you so much for tuning in, and we'll catch you next time. Bye bye.